Today I'm going to explain you how you can trade or invest in cyclical sector stocks. What are cyclical sector stocks? The sectors which goes with the economic cycles, with recession and boom periods. When there is a lot of money in the economy, there will be expansion, and when there is a money supply will be affected and recession period will come, that time such companies earning and profit will be decreasing. So you have to exit. You cannot hold these type of stocks like Tata Motor, Tata Steel for a very long term. You have to time your entry and exit. That I am going to explain you how you can do such. And I have explained this concept in one of my Hindi video around 4 months ago. This how to trade cyclical stocks in Indian stock market, learn with example of Tata Motors. And in these stocks, when we were discussing, the stock was around 920. So for, and before that I have explained in Instagram, but people have trolled like anything because they don't want to hear the truth. And now the stock is at 600. So you can learn. This was just for my showing you some belief system. I want to generate some belief system. Without showing, people don't believe. So this is just a show of what I will do, because without showing you, you will also not believe. And if you believe, there is no harm, because it is for your useful. It will be useful for you only. There is nothing I am getting from it. I am just explaining so that you will see and you will learn, because you have subscribed to me, so I have some responsibility toward you. You should not be stuck in some kind of cyclical stock just by because some Instagram influencer has told to buy on every level in Tata Motors. So better you learn this. This will be useful for your life. So what are cyclical stocks? Cyclical stock is a stock behind which a business is there, which is dependent upon the money supply of the economy. There are many type of businesses where there will be a cycle of expansion, where their earnings and their sales will be expanding. More cars will be sold, more houses will be sold, people will do lot of vacations, so airlines will get the money, hotel business will get the money. So these all types of businesses are actually cyclical in nature. But when there will be a peak, and after that when money shortage will be there in the economy, people will lose their job. So they will delay their decision of buying a car, buying a house. So that time, this is called recession period, and their earnings will go down. And this is the time where stocks will also go down. So you have to exit somewhere here in the peak. How to identify that, we are going to discuss in this video. So first of all, which are the sectors which are cyclical? So you have to go in Google and you have to search cyclical sectors. If you write cyclical sectors, these are the list will come: auto components, construction businesses. Because auto, I told you, people will delay their decision of buying a car if there is a recession in the market. And you can hear the news nowadays, last 4 5 months, that all car companies have huge inventory in their balance sheet also. If you know how to read, you can see that inventory numbers are huge, because that car sales have gone down. So this is the cycle which is starting, that bottom phase. That bottom phase is now starting or almost started, because car sales are going down. Now what will happen? The industries which are related to car sector, that will also see a decrease in sales growth and profit growth. Like semiconductor, these are used in auto industries. So this also you can see a decrease in profit trend. Now construction will also be decreased because people will not construct new houses. There will be lesser construction in the government level also. Steel industries is directly related to construction. Airline industries will be affected because people will not plan vacations and travel will be less. Hotel, restaurant, leisure industries, textile, apparel, and luxury goods, people will start. This will not be visible with one or two trends. Now soap, food, these type of businesses which are not affected with these cycles are not a cyclical sector. Suppose somebody is buying a pizza, he will not change his decision based on recession. Somebody is taking a bath with Lux soap, he will not change his decision with a recession. So anything you are using, or that company is producing or giving a service, you think about whether recession will affect its profit and sales numbers. If it is so, that company is a cyclical stock. Okay, this is clear. So cyclical stocks, you have to find out when it is the bottom and when it is the top. Okay, so when that earning will be flat, suppose earnings are decreasing, that profits is decreasing, and there will be a time when profits will be stable, like it will not, it will start become stabilized, and then you can see the number I will show you in Tata Motor, that profits are increasing again, that numbers will be stable and it will start decreasing. That itself will show you that this is the time you have to be cautious. Another easy example is your Federal Reserve and RBI's monetary policy. What is that? America has a MyBap of bank, that is called Federal Reserve. India has a MyBap of bank, that is RBI, who supplies and monitors money with the banks. What they do, they control that money supply in the market with the interest rate decision. You can see that after COVID there was a huge rate cuts and easy money was available in the market. Even the interest rate came down to 6.5%. You can avail that home loan. So why not people will buy homes and cars? Easy money was available. So this trend was started that more and more auto sector cars were selling and homes were selling. So these businesses got a huge chunk, and this rally came in that Tata Motor and other stocks. Now when in September last year September, then first rate cut came from the Federal Reserve. First rate cut came already, it was not in the news, it finally happened. That time it was sure that now government and RBI and other things, they are assured that recession may come, so they have to cut the rate so that more money will go in the market, and that money can fight against the recession, because more money will go means some growth will happen in the industries that was not there. So when the market saw this, market also started falling, and these companies also saw this recession period, and that trend has started. And you can hear that news that Mumbai real estate businesses are going to collapse, their prices are going to collapse, auto sales numbers are going down, these companies have a huge inventory. So these all things you can see, and the same things you can see in the numbers also. When you go in Tata Motors screener.in, that fundamentals, and you come to that quarterly results, what you will see is that December 2021 to September 22, this profit was negative, means the cycle was at the bottom and it was going to start. Then the profit started increasing, 3000, 4000, 4800, 6000, 7600, and 9000. This was the peak. March 24, that number peaked. So the cycle went like this. Profit went like this. Now you can see that profits are going down. These numbers are going down. So this is the same pattern you can see in the stock also. Stock also the same pattern repeated, and the stock went up and going down with this earning and sales. Anyway, earning and sales are important in any stocks, but with the case of cyclical stocks, this is even more important, because here you have to follow the cycles, that the cycle is going to start or going to end. So you have to be very cautious if you see in quarterly growth numbers that these are decreasing or becoming flattish. So this is one thing. Now the second thing is the very controversial thing. I will get a lot of trolling also. I have already got also in this video when I posted in that other thing which I shown you just now in my Hindi video. But finally that happened. The stock was here and now it has fallen. So that is correct. That is correct. But the thing which I am going to explain you, that is the P ratio. How a cyclical sector stock P ratio you can track. Now I am going to tell you that for any other stock, if P ratio is less, it is the time to buy, and P ratio is more, that is the time to sell. And when the P ratio starts going up, that is expansion phase, and P will also expand with the EPS. But in cyclical stocks, what I have seen is Until unless PE ratio is going down, the stock is not a buy signal. When the PE ratio will start going up, that will be the time to buy. And also when PE ratio is at the lowest level, that is the time to sell. When PE is at the highest level, that is the time to buy. And these lower levels, this is the time to sell. How I am telling you, I am going to explain you. First you see the Tata Motor example, then we'll talk about why this is so. 9th of June 23, 9th June 23, Tata Motors P ratio was 111, and here August 24 P ratio was 10. Now what I am telling is, what would you have done 9th June 2024 here somewhere, when this given a breakout from this range, a triangular pattern with volume drying up, a very good buy signal at the 500 level. This time Tata Motor P ratio was 111. Anybody who sees the P ratio in normal sense will tell you that such high P don't buy the stock. But for a cyclical sector company, if it is at high P ratio, that shows that this is a buy signal. And when it is at the top in 2024 uh, August somewhere, P ratio was 10. This is the time to sell. And now P ratio is 7, because P ratio is falling. Until unless this is falling, it is not a buy signal. When this will start rising, that will be the buy signal. This is a clear thing which I follow from the book One Up on the Wall Street by Peter Lynch. But you can decide whether you have to trade or invest, or simply avoid cyclical sector if you don't understand this and if you find this confusing. But this is the truth. You have to see P ratio like this only in cyclical sectors. Maybe this is confusing with other things, but this is what I find out. P ratio was decreasing in this range also. Now also it is decreasing, until unless you see a trend where it is increasing 20, 25, you should not make a decision. You see the decision was when it was 110 and all. Why this is so actually? Because P divided by E. Now suppose this cycle is like this. Now when this cycle is at the lowest level here, when the cycle is at the lowest level, earnings would be at the lowest level, because the stock is not earning much. So suppose earning is 1 rupee. Okay, now the stock price is 100 rupees suppose, and earning behind per share is 1 rupee. So what will be the P ratio? 100. Like this here, what was there. Now at the top of this, earning will be what? Earning will be maybe 50, because earnings will increase and become a top. Now the stock price will also increase. Suppose stock price will become 500. Stock price has become 500, from 100 to 500 stock prices, and that earning has become 50. Now this P ratio will be 10. The P ratio which was 100 has become 10 at the top. Like this same case. So hope I have explained you. I have tried to explain you. It's very complex thing, but the simple thing is you can follow that rate decisions of RBI, and also the company's earning and profit statements in screener.in. That will help you to trade and invest in cyclical stocks. And these are the sectors which are cyclical sectors. You can mark this, keep a copy in your notebook, that if you find a company within these sectors, always be careful about the stock prices. It can fall to any level. I am telling you, any level. Stock has already crashed from 1100 to 600. Almost 50% it has crashed. It can fall more also, because in COVID you may have seen that stock was available at 70 rupees, Tata Motor. So there is no limit. Don't average out in every level thinking that it will go up someday. It may take 4-5 years to go back to that same level. Your opportunity cost is missing. You can invest in other stocks which may give you 10 times in that period. So hope you like that video. Consider subscribing Trade with Books English channel and share with your friends, so that I'll be encouraged to make such videos, because you have seen that very good videos are also getting a view of 1000, 2000. That's the harsh reality. Until unless you hire some editing agency with some 8,000, 10,000 rupees per video cost, nothing will work, and that money I will not get because I'm not selling any course. So this is the reality, like cyclical sector. All the best.